Hello everyone, this is Neha Pellegrino, Senior MSP Compliance Counsel, and I wanted to take a moment to welcome you to the ECS on MSP podcast. As you all know, ECS is dedicated to assisting you navigate all the complexities of MSP compliance, but we believe that compliance shouldn't be static. The rules evolve, technology evolves, and the way people consume information evolves, which is what led us here. While we've been continuing to connect with you through our monthly webinars, which we love providing, we recognize that this industry moves really fast, and so do the professionals working in it. So the idea behind the podcast is about meeting you where you are by delivering content in a way that fits your schedule. And we're really excited to have this be a part of our ongoing commitment to share knowledge and support you. Each episode will bring you practical insights and real-world discussions, all in a format that's easy to listen to and easy to learn from, almost like you're sitting on the couch in our office. So whether you're here to stay compliant, deepen your understanding, or just hear from the voices that live and breathe this work every day, you're in the right place. That being said, let's get started.
Thanks, Adriana, and thanks everybody for joining today's webinar. And as it is, April showers bring May flowers, right? So that's hopefully the way that this works today. We have some really big updates actually, and that sort of was maybe anticipated when we put together this particular agenda. We have user guide updates. So there are some breaking news user guide updates that have to do with today's presentation, with what we came here originally to talk about, which is mandatory MSA reporting at 1 year. There was a WCMSA reporting town hall call last week on the 15th, and we're going to give you a little bit of a recap on where things were originally and then now where things are as of last week. We'll talk about the challenges of this really important change that CMS introduced a little bit over a year ago, and then some recommendations, and then what comes next. And of course, we'll get to your Q&A. We strongly encouraged a lot of questions today. We know that there will be questions, and we certainly invite them. So with that, I guess we'll go on to the next slide, and we'll go ahead and get started. Okay, so our breakdown today and our sort of rundown is going to be, we're going to cover breaking news, WCMSA reporting recap, the town hall, challenges, recommendations. Let's get started. What's our breaking news? Well, first up, we have new user guide updates. And so we'll kind of cover these in some detail because there are a lot of changes. There are a lot of changes that happened. We'll start with ORM termination guidance. If you look at our most recent web blog, ORM termination was last, and we've had a lot of time to look at it. So, well, maybe not a lot. We've had about 8 days to look at it. So we'll cover ORM termination first and give you all some clarity around that. That does have impact not only in workers' comp claims, which is probably where a lot of folks on this line are today, but also in no fault. That has an impact in no fault as well. We'll cover some of the WCMSA reporting guidance in both multiple DOI and RRE situations. And when there are multiple dates of loss and multiple RREs, there can be situations where a liability carrier is impacted. So if you're in liability, don't be shy. Feel free to ask any questions around those announcements. Also impacting liability, slight change to the wrongful death reporting piece, and this is important. So we'll cover that. State commission clarifications, which is really not that big of a deal, but it is something that they covered. And then last but not least, we will spend a significant amount of time on that WCMSA webinar. And so let's go ahead. We'll turn it over to the next slide. And we'll start with ORM termination. So ORM termination, I think this is where, Michael, I'm going to hand it over to you to kind of get started on the process of, or I should say the broadening of the language around ORM termination.
So when we look at the ORM termination language in user guide, CMS really itemized when are appropriate times to enter in that ORM termination date. And again, we're talking about reporting to CMS that this is an endpoint for when that insurer no longer has primary payer responsibilities. So we have the very specific ones like you have a court order based on a hearing on the merits, you have a treating doctor indicating there is an end to the treatment. And then you have this one that we're looking at right here where we have the copy and paste from the user guide where it says where the insurer's responsibility for ORM has been terminated per the terms of the pertinent insurance contract. And just kind of moving along here, that is not prohibited by the terms of the insurance contract or applicable state or federal law. And they've added this clarification note, which is, I think, really the important part and really the part that opens it up quite a bit for interpretation. So it says an insurer's refusal to accept ORM or to continue to accept ORM is a valid ORM termination reason. So just, stopping right there, basically says, look, you refuse to accept ongoing responsibility for medicals, or at some point as you're progressing through your claim, you're investigating, you get new information, there is some valid reason, you can end ORM acceptance along the way, provided that the refusal is permitted by applicable state or federal law and the terms of the insurance contract. So what CMS is now adding in here is really just kind of taking a more open approach to, look, we get that these insurance terms are going to vary based on the states, especially in like a work comp situation. So if it is permitted, you can terminate ORM as long as allows it in your jurisdiction. So really, we're kind of grasping with, is this more in line with, are we approaching a good faith termination basis here? Because if you look at different states and what they permit across the board for, say, workers' compensation, it can vary. You can interpret, I guess, a lot of different parts of the law to say this is an endpoint. You can establish this as an endpoint. But at the same time, I think you do want to be careful to say, are we doing this on a good faith basis? Is the law really allowing us to do this here? And just kind of taking that extra due diligence, just because CMS doesn't really get more specific than what we have right here. So this is up to interpretation a little bit based on what they've put on the user guide. Moving on to the next slide, we're just going to look at really this broader impact, because as you know, under the non-group health plan side, we have three different categories. We have liability, the no fault, and the workers' compensation. Liability, we're not seeing a ton of impact here. Liability is largely contract-based. That has always been the case, that you can terminate ORM. Well, liability, you don't accept ORM. So that's kind of where you're at. If you don't accept it, you don't terminate it. So liability, not impacted here. The ones that you do accept ORM, we have no fault and workers' compensation. So no fault, you may not think it, because most of the no fault claims, they're pretty easy to interpret. Most states have a simple no fault policy. However, there are some more complex states, just off the top of my head, Michigan, where you have those PIP claims that can be open-ended. And then you also have New Jersey, where they have these higher dollar amounts involved. So where you have these type of no-fault claims where it's a high dollar amount, but it's long been closed in, again, one of these high value or unlimited end date states, really looking at, does the law permit closure of or termination of ORM with regard to those specific no-fault claims? Or do you have a query tail purge type situation? And Marty, would you want to comment on the query tail purge? I know you're a little bit more familiar with that particular item.
Yeah, sure. So basically, what people typically do is they're going to query, and you should be querying any claim that could potentially be reportable, right? So if you have, for example, in Michigan, lifetime PIP on a claim that goes back to 2013, where there's been maybe tens of thousands of dollars worth of treatment that occurred back in, say, 2013, 2014, but the person was 25 years old at the time. And now, they're in their mid 30s. They're not in their mid 20s anymore. They're in their mid 30s. You're probably still querying that claim. That you're going to be querying that claim really for a very long time. That claim's been closed on your side for a very long time. You're permitted probably at that point to, and that's the key word, right? Permitted under the terms of the insurance contract to basically say, wait a second. If a bill comes in, my first instinct in this particular case is not to accept it. I'm not just going to wait 12 years and then start paying for medical, right? I'm going to investigate at that point, right? So that's really what CMS is sort of allowing you potentially to do in cases like this, is to take a look at some of those cases where you may have either been querying it in the past, and you probably are still querying it. Maybe you don't want to query that claim anymore until such time as that claim does arise again. And what are the odds that a claim is going to come back zombie like 13 years later from the dead? And then similarly on those, as mentioned, that first bullet point there, those higher dollar cases that are long closed, right? So are you permitted under the terms of your agreement to basically say, wait a second, we've been we're no longer rubber stamping this claim and saying that, in fact, this is a claim where we're going to pay it. So that's really the key. I think that one of the things that we're going to think about, and it's only been about 8 or 9 days here, is how do you examine not only those cases that were you've long reported as ORMY potentially, but also that huge number of claims that you're querying. If you look at the number of claims that most organizations are querying, especially on the no fault side, they're querying multiple times more than their open claims. And so that creates situations where when those people do in fact become Medicare beneficiaries, you're looking at these claims and say, well, this claim's closed. Why are we even dealing with this particular claim? This is probably a big opportunity here, especially on those no fault cases in those higher dollar PIP states. For example, Michigan, obviously lifetime PIP. Michael, what about that work comp impact?
Yeah, so work comp, in some ways, we're kind of going straight from those specific no-fault situations. Work comp, you have benefits for life in most states. So it's really, a lot of those states are going to have mechanisms to shut down the claim, whether it is there's been the absence of treatment for a certain amount of time. There are books that say these are points where you've no longer accepted the claim, and that is okay and permitted by law. So I think there was always kind of this tiptoeing, or at least a lack of interpretation by some entities that work with ORM termination, saying, well, if we don't have a court order, if we don't have one of these like really definite endings that CMS has provided, I guess there's some hesitation to enter the ORM termination date. And this is kind of a way of just opening it up and saying, look, we get there are nuances in each state as far as this is an endpoint where you have no longer accepted medicals. So by saying you accepted medicals, CMS is basically saying, yeah, along the way, if that changes, update your ORM termination status. So that's where we're kind of going back to what's the good faith basis to say you're no longer responsible. You want to make sure that there is some foundation that is not arbitrary in nature. You want to make sure that you are, in fact, permitted by law to enter that ORM termination date. So you don't have to be within the strict confines of, I think, what some people thought it was previously, but just make sure that you have some grounded basis in order to enter that ORM termination date. An example here, there are some where abandoned treatment but no medical discharge. There's over $25,000 in medical claims. Really not in that one category of ORM termination where you have to make the 4 categories criteria have been met. But again, there are states like Arkansas, Louisiana, where if you have treatment that's been abandoned and after a certain point, the insurer can say, we've no longer accepted medical on this claim. So again, there are tons of statutes across the board where it permits ending the responsibility. And you just want to make sure that if you're choosing to enter our termination, that you really have that good faith basis to say, we aren't responsible any longer. Marty, do you want to?
Yeah, sorry, Michael. Yeah, I'll go back on that slide. Sorry, Adriana, I was on mute. But yeah, that's that key where you're looking at cases where in the past you would have been maybe reluctant to terminate just because you don't want to run the risk that you're gonna be over terminated, right? You don't want to over terminate those on cases where you're not quite sure. Well, this is, I think, giving it a little bit more leeway to say, well, it's permitted for us to say this person's abandoned their treatment, we're going to terminate ORM. Just because we don't have a medical record, we're not going to send the person back to the doctor and say, hey, we haven't seen this person in 5 years and we don't expect to see them any longer. That's not what we would anticipate doing. That's not normal claims handling behavior. This gives you a little bit more leeway in those cases to potentially terminate ORM. I do think that the hard part for this may be, and certainly this is a good point and a good opportunity for you to contact your expert like me or Michael or any of the other attorneys who work here, is to say, okay, well, what kind of standard could we employ that wouldn't just apply in a single case, but that we could look at for all of our cases so that we can have easy to understand claim rules that can be applied by every single adjuster countrywide, right? Because at the end of the day, what you want to make sure of is that you're not in a position of having to go back and forth and say, well, this particular adjuster does it one way and that particular adjuster does another. You want to have really solid claim rules that give you the information, to your team that make it easy for them to go ahead and duplicate that, termination, regardless of which, who they are and where they live, as long as they have good claim rules. So we can now go back onto that next slide. Sorry about that.
All right, so as far as one of the other items that they updated in the user guide, it is some additional clarification on the total payment obligation to the claimant, or TPOC entries, specific to multiple claims, multiple parties. So CMS previously put in this new language specifying how they want TPOC reported. So basically, with one single insurance entity or one single RRE reporting multiple dates of injury in a single settlement. So let's say you have 3 different dates of injury. You're settling all of them together for $100,000. CMS previously said, look, you do this, then make sure you are entering only the TPOC on the earliest date of injury. And then enter in all the ICD codes. If, let's say, you have 3 different dates of injury, but they don't all have the same body parts. CMS just says, hey, make this easy. Earliest date of injury, put all the ICD codes that aren't on that earliest date of injury and migrate them over to that one. So let's say you have a back, a knee, and a neck across those 3 claims. Put all the ICD codes on the earliest date of injury and report the TPOC there. So CMS has clarified here, look, we didn't actually clarify what we want had to happen with the work comp MSA information. They're saying do the same exact thing. Report the work comp MSA only on the earliest date of injury. So essentially, you're reporting all that settlement, work comp MSA, and ICD codes on the earliest date of injury, and then you're entering ORM terminations on all 3 dates of injury. Those later dates of injury, don't enter the TPOC in those ones. Now, it gets a little bit different when you get into you are settling a global settlement with multiple insurers or multiple RREs. So on one hand, what CMS previously said, they make it a little bit easier than I think there wasn't quite the clarification before. CMS said, look, everybody, unless it's a joint and several liability case, which is uncommon. So if it's a joint and several liability settlement, this isn't applied. But if it's not joint and several liability, then everybody just report your own share. When you report the TPOC, let's say, again, you have 2 different RREs settling. They each settle for $50,000 each for a total of $100,000. CMS is saying, look, each of you just report your $50,000 settlement share, and then we're good there. They updated this with the work comp MSA because it wasn't quite clear who reports the work comp MSA information before. Here's where I feel like it becomes a little less intuitive because you're doing something a little bit different. So let's say, using that hypothetical again, 2 different insurers, each settling for $50,000. However, within that $100,000 settlement, there $60,000 of that is an MSA. So $100,000 settlement, but $60,000 is an MSA. Both parties are contributing $50,000 each. CMS says you need to each report the total work comp MSA amount. So if you're following along there, you have a situation now where CMS says you're reporting a $50,000 TPOC, but you're reporting a $60,000 comp MSA each. As you've noticed, the work comp MSA amount is higher than the TPOC. So it's a little bit, it's not quite intuitive in that regard. And you do have situations where that work comp MSA amount can be higher than the TPOC that you're actually reporting. So it's a little bit confusing. That everybody's probably going to need to train their teams, train their adjusters to make sure that they're doing this correctly going forward. Just because, again, CMS just updated the clarification on this because they didn't spell it out before. Before it wasn't quite clear. Now it is. At least we have a defined way forward, even if it doesn't make a ton of sense with one number being higher than the other.
Yeah, and not only is it confusing, it's also not the way that people handle claims, right? I mean, at the end of the day, a lot of times you're settling that case, and you might be involved in the settlement for $1,000 or $2,000, and then there's another part of the settlement that gets resolved. The MSA is something that you might not even have a lot of transparency into because you're settling that case. This happens all the time, obviously, Michael, where you are up in Minnesota, where you're having these exposure claims where there's carriers that are contributing small amounts, and then there's one carrier that might be contributing a ton. That one carrier is the one who understands the MSA. The others don't even care. And so now they're being asked to include, everyone's being asked to include it. And I can't, imagine that that's going to always be easy to figure out, right? So this is new guidance from CMS. It's certainly counterintuitive, as Michael points out. And, Michael, as you pointed out on the first one too, you're looking at situations where CMS wants you to include the very first date of loss. One question that we have run into with some of our clients, and we've seen just in the field generally, is that it's not always the first date of loss that goes on the settlement release that in fact is something that's set up in the carrier system, right? You might have a situation where there was an incident only claim that everyone's aware of, but in fact nothing happened with, and so somehow that winds up on the settlement. Certainly just because that's on the settlement paperwork, if you haven't set a claim up in your system for that particular claim, it's not only counterintuitive, but probably not the smartest practice to just go and set up a sort of shell claim for that one date of loss and throw everything on that one date of loss just because the person, had this one very, very minor incident that somehow got wrapped into that settlement. So there's a lot here in these two areas where it's extremely counterintuitive from a claims handling perspective. It's extremely counterintuitive from best practices perspective from claims handling, and it's also to what end, right? Like, what's the benefit to CMS in these particular situations? Is it really just so that they can have it so that their system doesn't kind of get all malfunctioned on the back end just because you reported two different work comp Medicare set aside amounts, even though you reported the same settlement and you reported the TPOC information correctly? At the end of the day, the most important thing is to report the TPOC correctly, right? So you want to make sure that you get that sent in timely and accurately. That's the most important piece of this puzzle. The WCMSA fields, while obviously important, while obviously they can have impact down the line for the beneficiary, you want to make sure that those are reported accurately, sure, but the TPOC information is the number one thing to focus on. Okay, so we can go on to that next slide. And this is one where CMS also made some changes, and Michael, here we're gonna kind of talk about this one in a little bit of an odd way too, right? So what CMS did was they modified the guidance around wrongful death claims, and they included this note where they said a citation where basically they said, in order for the wrongful death theory of liability to preclude Medicare from recovering from a settlement, judgment, award, or other payment, complete documentation must be provided that shows the claimant that what was claimed and released it or had the effect of releasing medicals. Additionally, a citation to the appropriate state statute or case law that precludes recovery should be included with any such dispute or appeal. So this is actually has nothing to do with Section 111 reporting. Nothing to do with Section 111 reporting. Only has to do with conditional payments. So what did they do? They instead omitted language that indicated that payments entirely under the wrongful death theory of liability are not required to be reported. So they not only took that out, but they also included this requirement that was really around conditional payments and had nothing to do with Section 111 reporting. So key question here in all of this, when you're handling a wrongful death claim, does this mean now you have to report all of them? Does this mean now that you have to report some of them? Does this mean now you have to report none of them? I guess the key question that we always ask ourselves probably hasn't changed, has it, Michael? So the question of, does the settlement release the decedent's medicals, or is it personal to the next of kin, estate, whoever is actually, in fact, getting the money? This one really is very jurisdictionally specific, don't you think, Michael?
Yeah, absolutely. I think it's going to depend on the settlement terms. It's going to depend on the jurisdiction and what's permitted in the claim. And like you mentioned before, in some ways it feels a little out of place in the user guide where we're mostly talking about Section 111 when this is specifically a commentary on conditional payments and disputes and appeals.
Absolutely. And then the last thing that CMS did, they clarified around state commissions. They updated some language to include or commission, so that it's very clear that if a judge approves it or the commission approves your settlement, that's your ultimate TPOC date, the date of the commission approval. So with that, we can kind of move on to our next topic or our next section around the WCMSA reporting recap. And so I'm just going to give a quick, super duper fast recap here, and then Michael's going to get into the nuts and bolts of what CMS talked about in their town hall. But that's why we're here. We're here to talk about WCMSA reporting in the first place, right? So there's been so many different changes. We really wanted to make sure that they were covered here, and there is impact, obviously, to WCMSA reporting, which has been around for the last year. And in all workers' compensation settlements, so work comp settlements involving a Medicare beneficiary, total payment obligation to the claimant, those settlements, those TPOCs must include the MSA amount, the MSA period, the lump annuity indicator, the initial deposit amount of that structured settlement, if there is one, and then the anniversary amount of those structured settlements. And then as well as it's been described in the past as optional fields only, professional administration EIN or professional administrator EIN, as well as case control number. So that's how it's always been or had been up until last week. So Michael, I'm going to turn it over to you, and we're going to start to dive into what CMS talked about in that town hall call.
Yeah, thanks, Marty. So to start with, basically, CMS kind of went over who is required to report this information to CMS. I think we're looking at the next slide as far as what is CMS, who has to report this information. So basically, we're talking about if you have a Medicare beneficiary with a workers' compensation claim and you have a reportable TPOC event, then you are required to report what you did with regards to an MSA on that situation. And that includes everything. So this is not just include if you submitted an MSA to CMS. This also includes situations where, let's say you used an allocation that was not submitted to CMS for review, such as a non-submit or an evidence-based MSA. Also, let's say this is a below $25,000 settlement. So it was something where maybe you did some type of allocation, but it did not meet that CMS threshold for review. So even though you could not submit to CMS, you are still obligated to report what you did for the work comp MSA. And finally, situations where there was no money set aside for future medicals, whether this is you got a $0 MSA or whether you did not close out future medicals on some or all of the claims. There are plenty of states that you have a reportable TPOC where you don't close out future medical. I practice in Minnesota, so in Minnesota, there are things called to-date settlements where you settle everything except for future medical. So that would include past medical. And if there is a medical release, you are required to report a TPOC. So there are situations where you have to report that TPOC and you're going to have to report 0 for the work comp MSA. So really any situation where you've met, again, those 3 criteria, work comp claim, Medicare beneficiary, and reportable TPOC, you are also reporting this work comp MSA information now. CMS on the town hall, they went on to really cover what does CMS do with this information. So on the next slide, we're kind of covering really just kind of a recap of things CMS have been saying for quite a long time, but they just reiterated, this is why we do it. So essentially, CMS has never had this level of visibility into the data before. CMS really historically has only had information as to if you voluntarily participated in that CMS submission process for your MSA and then finalize your settlement with the MSA that got CMS approved. Historically, that was the only time CMS had visibility into that information. Now they're saying we need to know what's happening on all these settlements. So their indication is they wanted to basically make sure that they have identified any Medicare set-asides that are out there and to make sure that those files, the funds are being used to cover Medicare-related benefits and that those funds are being appropriately spent on those. So what does CMS do? So the first thing they do is they send the beneficiary a letter really detailing those responsibilities. They call it the toolkit letter. Really just says, hey, you got an MSA, here's what you need to do, here are the various obligations. They also place a marker in the common working file to identify that those MSA funds should be used to pay for Medicare-related benefits, like I was mentioning before. If you have a self-administered claimant, I mean, all claimants are required to do this, but if you have a professional administrator, they're going to do a lot of these check-the-box items. But if you have anybody that is self-administering their MSA funds, CMS is basically telling them, hey, you have to keep these funds in a separate interest-bearing account. You can only use these MSA funds on Medicare covered services, and they have to be related to the injury in question. They have to keep records. So we're talking about itemized receipts, bank statements, tax records, provide annual attestation to CMS, and also exhaustion notice if those funds exhaust. So there's quite a lot of things that the beneficiary is going to have to do to provide to CMS on these MSAs. And this is basically CMS initiating, we're going to put them on notice, we're going to make sure these funds are being spent down appropriately. Now to the town hall, they go deeper than that. They cover quite a few outstanding questions, and I'm going to turn it back over to Marty so he can kind of get us started there.
So when we talk about some of the changes that CMS made with regard to the town hall, let's start with the new and different information. So first of all, for case control numbers, CMS disclosed that they can talk through and just think through that they can tell us that failure to provide this information, failure to provide the case control number can cause multiple cases to be established. We don't really know what that means, honestly, but failure to provide the case control number is resulting in CMS's eyes, sometimes two different things. So, the way that this works on at the CMS side is that every time you submit a proposal for a Medicare set aside, they go into the workers' compensation case control system and they set a file up. What CMS is basically saying is, well, if you don't tell us about this case control number, we're going to go into the same system or some similar system and provide an MSA that's assigned some sort of, it's going to look a little bit differently. So this is one of those things where it's impacting CMS. How big it's impacting CMS, we really don't know, but they did tell us that failure to provide the information can cause multiple cases to be established. We also don't know how that impacts the beneficiary. There's been no impact that we've seen yet to beneficiaries in situations where there have been underreported case control numbers. The other thing that CMS said that's new and different is for professional administration, failure to provide previously identified professional administrator risks removal of the professional administrator from CMS's records. Well, that's something that CMS has now gone on the record about. And it's also, they've disclosed here that if you set the file up with your CMS submission, so we transmit or we submit the information to CMS, they approve it, they tell us that company X is going to be we tell them that company X is going to be the professional administrator, company X goes ahead and gets everything set up, and then CMS receives a Section 111 report that doesn't include company X. That's where there is potentially an issue at play. So all that being said, CMS is using this as a way to say, hey, listen, you really should, even though it's optional as it's written right now, you really should be providing this information. Now, there's a lot of reasons why, that we'll talk about in a little bit, why that it still says optional and why there may be challenges with reporting the information, period. But those are those are two really new things that CMS said. Now, other things, stuff that we knew, but CMS is now on the record for. Michael, what do we learn?
Yeah, so a lot of the other things that I think were big concerns was, look, this work comp MSA reporting is impacting the Medicare set-aside process with regard to that voluntary submission process of CMS. So areas where we were seeing things happen was if you had a approved work comp MSA with CMS and you had a mismatched work comp MSA total, that was getting it removed from the approved status where, let's say you had a $100,000.27 work comp MSA approved by CMS, and you reported $100,000 even. That was causing issues. Also, if you had an MSA that was pending, you had submitted to CMS, they were reviewing it, and a settlement got reported during that process, that was removing that case from the voluntary process and marking the file as being completed. Same thing with if you wanted to submit a file to CMS for review, but you had a TPOC reported, CMS is marking the file as completed and would not accept that submission. So CMS acknowledged that is all happening. And we'll get into kind of what's going on, what are the challenges, what are we doing there, but just know that CMS acknowledged, yeah, we know all these things are happening. And as far as what we already knew, some of these are things we touched on before, so we won't dwell too much. But CMS, had limited information. That's why they're doing this mandatory reporting. And you must report again if some portion of your settlement has that TPOC, a reportable TPOC. So again, you're releasing medicals as part of your settlement. You have an obligation to report the TPOC to CMS along with this work comp MSA information. Just timing wise, April 4th, 2025 is when that kicked in. And this impacted CMS's approach to civil monetary penalties specific to work comp claims. And interestingly enough, we know that they aren't auditing any of these work comp claims until July of 2026, but they explicitly stated in this phone call that the civil monetary penalties related to work comp MSAs will be limited to TPOC dates on or after August 1st, 2025. So if you're doing the math, if they're reviewing them in July of this year, scale it back 1 year, August 1st, 2025 makes sense as a logical start date for them to start reviewing it. So they haven't said it exactly like this before. Nothing has significantly changed. That's where the August 1st, 2025 comes into play with these new audits that are going to be happening on the work comp side in 2026. I think we're going to be moving into, I'll hand it back to you, Marty, to cover the critical information here.
Yeah, more information. So CMS also indicated that they've adjusted system logic so that there would be some value tolerance because of the fact that you could report a claim with, one MSA and then another MSA could have been submitted or transmitted to CMS, and it may have been a de minimis difference. CMS is reminding people that they should validate all data and check field requirements before reporting. Well, of course, you should try to do that, but of course, at the same time, if it was literally down to cents that was impacting people's, the creation or duplication of WCMSA data for CMS, which is, hopefully value tolerance will help that with a little bit. CMS also says that professional administration, quote, must be treated as required if there's a professional administrator. CMS is adjusting system logic and the user guide to mitigate this issue. They cannot convert the field to required without other adverse impacts on the RE community. Well, as we'll see later on, there is some impact around what is a non-disclosed required field. One thing that we challenge CMS here on is ultimately, if they're going to make these changes, the user guide has not been updated, right? So that the devil is always in the details on these things. And, as of right now, even with this CMS town hall call, when you look at it, technically speaking, a professional administration EIN is in fact something that is optional. And there are workarounds for the professional administrator at the moment if they're not provided as part of the fee. Just to kind of square the circle there are workarounds for the professional administrator to take care of this. A couple of other things that CMS has not clarified, but that must be, if the TPOC is entered incorrectly and you send an update transaction correcting all fields, does that have any impact? So CMS will accept update records of those WCMSA fields. So you can send in one MSA today and another MSA, in 3 months, but they didn't explain what that will do. Will that allow for the resubmission or the submission of an MSA that's been held up? It doesn't seem like that at the moment. So why would you update it, right? Will that permit CMS to review the file that was previously in the review process and removed due to a prior reported TPOC? Doesn't seem like it. We're not seeing it. So we'd love to see if CMS will go on the record and or allow for those things. But at the moment, we're not seeing it. And will that allow CMS to keep an original approval in place, right? CMS has said that those approvals are basically considered to be invalid if there is a mismatch or if someone previously unintentionally reported a $0 MSA when they intended to report a fully funded MSA. The devil's in the details on all of this. There's a lot of information that still needs to be clarified. We would love for CMS to go further onto the record with some of these unanswered questions. But at the end of the day, we can't all have wonderful thing. So we go on to the next slide, and we'll talk a little bit more about some of the
If I could
other
just jump
issues.
on
Oh yeah,
one more thing on the teapots real quick, if
yeah,
that's
sure.
cool. One other thing that I think is annoying here is CMS is basically taking this approach that there's only one valid reason for entering a TPOC, and that is that you've settled out future medical. And that's not the case. CMS has multiple TPOC fields for a reason. As I mentioned before, there are situations where you don't close out future medical, but now by adding in a TPOC date, you are essentially poisoning the well forever being able to submit something to CMS. And I think one of the lack of clarification that you mentioned with these other things is there's just really no indication of how do you get things back on track? How do you participate in the voluntary submission process? And we just don't have that guidance right now.
Absolutely, Michael. Absolutely. There's a lot of opportunity for CMS to have made some different choices here. And one of them would have been to abide by the actual WCMSA reference guide policies that they've had in place for a very long time, which allow for people to have their claim reviewed or have their MSA reviewed even after they've already settled it, right? So a lot to it. Here's one that many people may be surprised at is how does CMS actually take the information in? So there are two different types of errors or edits when you transmit data to CMS. So if I send in if I send a information about the Michael Flower settlement and it includes ICD codes that have absolutely no actual ICD code, then that claim is going to create an error. It's going to error out. It's not going to allow for the Michael Flower claim to be accepted, and I'm going to get a disposition code that says that they have not accepted the information. And then I have to go back and correct it, and I have another quarter to get the information over to CMS. So when that happens, then that's great. Most companies can edit that information ahead of time. They can review that information ahead of time because while there are hard errors, there are also soft edits, right? Soft edits mean that CMS says that the information is invalid. They want you to correct it and resubmit, but they will still accept the record. So if I had a settlement that occurred, they're still accepting it. I'm not going to get penalized even though there was some little thing that was off, right? So for a soft edit, where for a professional administration EIN, they get a soft edit. So if there's if it's not a valid EIN, CMS still will accept my transmission of a TPOC report. That's great. I can go back and correct the EIN later on, but they still have me I've gotten past the goalie and I will not be penalized for being late reported. Hard errors for things such as ICD codes. There's no valid ICD code for that particular claim. That makes sense, right? You're submitting garbage data when you get a hard error. Hard error is a return for garbage data. Except in situations where you provide a case control number, and the case control number cannot be matched to somebody's case control number in the WCCS system. That means that you could, if you try to report a case control number and the case control number cannot be matched to somebody, and that means your claim will be rejected and you could potentially be subject to a CMP just because you could not get the case control number accurately provided. That case control number only lives in the CMS system, and it makes its way typically to a Medicare set-aside vendor, and then to the adjuster, and then into the claim system. There's multiple different ways for that to get screwed up. And then it's impossible to identify what's the actual case control number unless you go to the source document and or contact CMS, and you're authorized to contact CMS. Our editorial comment here is placing a hard error in this field makes absolutely no sense. This is something that we've only just learned recently. We strongly recommend that CMS make changes in this area. So this is a big one, and it impacts the way that people may want to think about reporting case control number, even though CMS is strongly suggesting reporting case control number. Now, optional or required, current written guidance, again from CMS, does not require this. So we are waiting for the updated user guide. What that user guide will look like, we do not know. We anticipate that there will be minor changes to it, but hopefully that user guide will come sooner rather than later. When it comes, then that potentially could create a further delay because of if there is additional development that's required, then that could create a further delay in CMS's ability to impose civil money penalties. CMS has pledged previously that 6 months will have to be provided for people, for companies to make changes where there is development that's required. If you're gathering the information, as it says here, CMS case control number is impossible for anybody unless you submit the case to CMS on your own or have access to the source document. So you have to have a copy of the CMS approval letter, and make sure you type that in correctly if you're going to get that correct. So this is really important piece of information. If you don't have that information correct, it can, and you report incorrect information. Now you can report zeros, all zeros. You can report nothing in that area, and the claim will be accepted by CMS. Or you can report incorrect information, the claim will be rejected by CMS, and you could be subject to a civil money penalty. That's just something to think about. Lastly, but not least, conflicting guidance that we've seen here from challenges. In terms of challenges, if the file has a TPOC that's been entered prior to CMS submission, CMS is not permitting MSA submissions, and the file is marked as settled without CMS approval. And again, I've mentioned this before, this is against the written guidance that's in the WCMSA reference guide. We've got two different policy documents that say two completely diametrically opposed things. So one of those things has to change. You know, it's the divided house. House divided against itself cannot stand, right, Michael? I mean, this is something that CMS would be wise to update this guidance. Do you agree?
Yeah, if they want people to participate in this voluntary process, you have to give them a path forward to do that. I think right now they are making things difficult and preventing it from happening. So you are having entities that would normally submit everything they could to CMS have to make a choice not to because of some of these TPOC issues.
Yeah, absolutely. There's so much to this, and there's so many different challenges that we're seeing with regard to this particular process that, you know, it's particularly frustrating when, you know, CMS introduced this information, you know, a year ago, and almost immediately started acting upon the data in terms of edits to the work comp case control system, in terms of looking at the data in a way that was potentially going to reject data that should really just be accepted by CMS. So, or was going to reject claims where the data may be a little bit dirty, right? So at the end of the day, like those are decisions that were made at CMS a year ago that, you know, if you go back in time to the dawn of Section 111 reporting, which is at this point, you know, 15, 16, 17 years ago, you know, they really didn't act on the data that was initially received right away. What they did was they accepted the data in, they evaluated it, they course corrected along the way. But it wasn't really for about 5 or 6 years before they even started ORM recovery, right? So at the end of the day, this is really where the big challenge is these are decisions that the industry has not done anything wrong, and CMS has imposed significant challenge upon the industry to get basically information to CMS just because CMS can't match the claims on their own side. So there's my editorial comment once again, but it's particularly a frustrating situation, I'm sure, for people whose claims have been held up from review, whose judges don't understand why the claim was held up. We've got claimants who can't understand what's happening. Where's my CMS approval letter? Well, we can't get it in because of the fact that there was this issue with reporting the claim. Simple as that. So it's very, very, very frustrating for those small number of claims that are impacted. Now, we can go on to the next slide and we'll kind of talk through some of the recommendations and get to our 5 key takeaways. And we do have an absolute huge number of questions that are coming in. So questions or recommendations, I'll take the first one. So right off the bat, just a very simple one. Document your decision-making consistently with a clear policy that can be followed, and that is audit-proof. So this is true for pretty much everything we talked about today. But how about let's start with going back to the very beginning, ORM termination, right? If you want to have really clear guidance around ORM termination for your adjusters, if you're a decision maker, if you're an adjuster, you want to be able to look at rules that basically tell you, can I terminate or not, right? It should be something that's very clear and that is audit proof. And that's something that can be done countrywide, regardless of, you know, which state you're in and which office you're in. And that's true for ORM termination. That's also true for your decisions around what you're doing in those WCMSA reporting situations, right? So I've got a case that's settling for $24,000. what's telling me how much money to put aside, right? Or how much money to report? Is it the same, or is it just the adjuster's decision? Is it the same for me if I'm in Boston versus Michael who's in Minneapolis? Hopefully we are looking at the same document that's helping us guide our decision. And it's not just because of the fact that I have one lawyer who's on my case and he has another lawyer who's on his case. So that's the first one. Document clear decision making with a clear policy that's audit proof. Michael, what about number two?
Yeah, the next one, really just make sure that you actually have to report the TPOC, because I think one of the main issues we've been seeing is TPOC got reported by accident. So it's really just identifying and making sure that you are aware of when should I actually be reporting a settlement to CMS. A lot of times we get people that are reporting voluntary payments as, let's say they're just voluntarily paying out permanency or something like that. That's not a TPOC. Anything that is an indemnity-only settlement. So anything that doesn't include a medical release is essentially indemnity in CMS's eyes. So if you have an indemnity-only settlement, don't report that to CMS. So it's really just making sure that you are only reporting those settlements. And we get that there are adjusters with various levels of experience. So just making sure that if you have questions, ask a supervisor. You can reach out to ExamWorks. You're going to have help as far as when to report these, but make sure you're doing it right before you do it, just because if you do it wrong, you could have a headache later on. Marty, as far as, look, you have a TPOC, you have to report it. We have concerns now. What do you say about the third item?
Yeah, so third one, really important, right? The most important thing here is you don't want to get fined, right? So when weighing the risks, report the TPOC even if it impacts some of the mandatory MSA reporting data. Hey, we need to get this TPOC reported. We don't have the case control number. We got to do something. Or we need to get the TPOC reported. There's some information that's sort of messed up with regard to the MSA. You got to get the TPOC reported, right? So we have a settlement involving this particular claimant. We need to get the TPOC reported, even if there are multiple people involved on both sides, right? We have to get the TPOC reported. That's the most important thing. Next up, Michael, what's the next item for you?
So it's really, again, we are doing these work comp MSA fields, and it's just imperative that you are doing these accurately. So work with your MSA partner to make sure that you are validating those MSA fields prior to reporting them. Usually when you get an MSA report, it's going to have things like the MSA total, the seed, the annual amount, the type of administration. That can also differ once you get CMS approval. So just make sure that before you enter in that work comp MSA information that you have the right entries to put in there, and your MSA partner is going to be able to give that to you and give you exactly the fields you need to enter. Because again, we've seen if they don't match up, then CMS has been potentially rescinding approval because those amounts don't match up. And they do have a tolerance threshold now, but we don't know exactly what the margin of error is. So if you're off by pennies, it seems like that's okay going forward. But if you're off by more than that, we don't know. So just make sure you are partnering and getting it right the first time. As far as what's coming forward with the user guide, Marty, do you want to address that as our final recommendation?
Yeah, sure, Michael, for sure. I mean, no matter what, you want to measure. We've said from the very beginning when it comes to mandatory MSA reporting that you want to measure twice and cut once. Make sure you have accurate information and then report it. Make sure that your case is actually settled and then report it, right? So all of those things are important. The last sort of bit of measure twice and cut once is, why don't we wait until there's an actual CMS user guide around the requirements around EIN and case control number before we go willy-nilly into it. Now, certainly, if you can report those pieces of information, that's great, and you want to be able to make sure that you do so. However, we do strongly think that it would be wise for CMS to publish better clarity around EIN as a soft edit. It would be wise for CMS to seriously and profoundly reconsider using case control number as a hard edit or a hard error that could result in the claim not being transmitted effectively to CMS and could result in civil money penalties. Doesn't make any sense. For data that the person ultimately who's responsible for reporting it has absolutely no way to validate it. There's just no way to validate it. So what you're going to do is you're going to incentivize at CMS people just to not report CCN, right? CMS is saying it's required, but if I report it wrong, then it's going to create a real problem for me. So maybe CMS should reconsider that and make that a soft edit. We can only hope. We can only hope. With that being said, I think we have set the all-time record for an ECS claim or an ECS webinar for Q&A. So we're going to give you all a break on getting the Q&A out to you. Our 5 key takeaways for today are ORM termination guidance is liberalized. Take the opportunity. That's big. WCMSA reporting means that enforcement of CMPs related to WCMSAs will be limited to TPOC dates on or after 8/1/2025. If your TPOC date was prior to that, more likely than not, especially on the comp side, you're not going to be hit with a civil money penalty. CMS has changed its tune on how optional professional administration EIN and case control number really are. But what will the user guide say? I just mentioned that. CMS is evaluating the data. Make sure that it's not only accurate, but also adequately and accurately identifies future medical needs. And then last but not least, you can't get a civil money penalty for misreporting WCMSA data, but you can get a civil money penalty for late reported TPOCs. When in doubt, report the TPOC as accurately as possible.
Thank you for listening to this episode of the ECS on MSP podcast. We look forward to joining you next month for our next episode. For the latest updates and educational content from ECS, please visit our website at examworkscompliance.com. See you next time. Thank you for listening to this episode of the ECS on MSP podcast. We look forward to joining you next month for our next episode. For the latest updates and educational content from ECS, please visit our website at examworkscompliance.com. See you next time.